I want to talk to you this morning about the importance of inventory management and inventory control and what it means in the business world today. Inventory begins by understanding that it's not just stuff, it's not just material. Inventory is money, inventory is dollars on the floor. Let's begin with the acronym IRA. IRA is not the Irish Republican Army. It's not a vehicle for your retirement. IRA stands for Inventory Record Accuracy. Now, accuracy is merely the report card on whether you did or did not control it. So is the issue across the country accuracy? No, it's not. The issue is control. And a lot of people think they have an accuracy problem, but in fact they don't have an accuracy problem, they have a control problem. Now, the cardinal rule on inventory control is simply this: no material gets accepted, issued, or moved without proper authorization. Do you have material that got moved without authorization? Because therein lies the flaw in your system. But remember, accuracy contains variance. And variance can be high, variance can be low. And many people take a variance plus and minus and they lump it together like I'm over by $240,000 on one side, I'm under by $250,000 on the other side, and they think they're only off by $10,000 because they simply look at the dollars. Where in fact, you're off by $490,000, not $10,000. So we have to look at it for what it really is. You have to look at units first, and then dollars second. Now, inventory is an asset, but it's not a productive asset. It's an asset because if you look at your balance sheet, line number 3, left-hand side, first you'll see cash, second you'll see accounts receivable. Line number 3 is inventory. It's an asset, but it's not a productive asset. And here's what I mean by that. If I take my same money instead of buying material, and I put it in the local bank, the longer I leave my money in the bank, what would I get? Interest. But if I buy motors, if I buy widgets, and I leave them on the shelf for a year, what did I get? That line item is called carrying cost. And if you're ever going to cut cost or save money in cost, first of all, you have to know where you spend it. It's called ABC, activity-based costing. So what's the activity that we speak to right now? Keeping it. You pay taxes, you pay insurance, you pay for material handling, you pay labor, and it's also the use of your money. So that carrying cost exists as a real cost. And sometimes when I look at inventory, I have people that keep items for 1 year, 2 years, 3 years, and if your carrying cost is 25 to 40% a year, then if the item's worth $100, you just added another 25. You kept it a second year, you added another 25. Now you're up to 150. And yet sometimes people keep it for 8 years, 9 years, 10 years. Now, in most businesses that's not good. Unless you're in the antique business, then it's going to accrue value. But if you're not in the antique business, then we need to eliminate inventory, we need to lower inventory. So even though it's an asset, it's not a productive asset. But then inventory graduated in what we have today. And what we have today is called cycle counting. Now, cycle counting is still inventory, but it's inventory counted on a cyclical basis. You're always in the middle of your work. You normally count a certain number of items each day, and you follow a schedule. Normally, it's driven by a criteria, and the criteria is by usage, and it's by cost, but cost times usage equals what is called annual usage value, and that drives the criteria. But I need to separate parts, I need to separate finished goods, otherwise the most important items would always be finished goods. So when I set up cycle counting, is it still inventory? Yes, so the simple fact remains that if you count it more often, you'll get better numbers. But is that why I did cycle counting? No, it's not. The primary purpose of cycle counting has two major objectives, and they're these. To find the cause of the error and then fix the condition. So cycle counting is about driving your numbers up so you make better decisions in business, because inventory accuracy and cycle counting is all about keeping your company solvent.